Microfinance, it was supposed to be this revolutionary tool to lift people out of poverty. But what happens when that lifeline becomes a trap? Today, we're going to dive into a pretty eye-opening investigation into the promise and the peril of microfinance, and we're zeroing in on a startling case study from the region of Meghalaya. And that really brings us to the big question here, the one that frames this whole story. At what point does a system designed to help actually start to do harm? Let's dig in.
Okay, so first things first, let's talk about the promise. What was microfinance supposed to be all about?
On paper, the whole idea is pretty genius, right? It's all about financial inclusion. It's about giving these small loans, these microloans, to people who are completely locked out of the normal banking system. The goal? To empower them, especially women, to start their own small businesses, make their own money, and finally break that cycle of poverty. It's supposed to be empowerment, from the ground up. But, and this is a big but, the investigation we're looking at today alleges that this noble vision has been twisted into something pretty dangerous. Because according to our source, for a lot of folks in Meghalaya, especially women in poorer urban and rural areas, this whole experience, it's not one of empowerment, not at all. It's one of entrapment. And this quote from the source really just hits the nail on the head. It makes this incredibly serious accusation that the system designed to fight poverty has basically morphed into predatory lending in disguise. And the core of this whole accusation, it really boils down to one single shocking number. The source claims that these microfinance institutions, or MFIs, are charging annual interest rates that go as high as 36%. And just to put that into perspective for you, these MFI rates are allegedly 3 to 5 times higher than what you'd get from a formal bank. It just makes you wonder, right? How is anyone supposed to get out of poverty when they're carrying that kind of financial weight? So, okay, how does this actually happen? How does this spiral into what the source is calling a debt trap? While the source says it's not just about those crazy high interest rates, it points to a pattern of really aggressive tactics used to make sure people pay up. We're talking about things like publicly shaming borrowers who are late on payments, threatening to take away the very tools they use to make a living, like a sewing machine, and then bundling these loans with all these tough, non-negotiable conditions. And this is where it all comes together to create this vicious cycle. So imagine this. Someone takes out a loan, but the interest payments are so high, they just eat up pretty much all their income. That means the original loan amount, the principal, it barely gets any smaller. So what happens next? They're forced to take out a new loan just to keep paying off the old one. It's a total downward spiral, trapping them deeper and deeper in debt. So, faced with what they're calling a crisis, the source doesn't just point out the problem. Nope, it actually calls on people, on regular citizens, to become investigators themselves. And the first step is all about gathering proof. The source encourages folks on the ground to talk to borrowers and ask some really direct questions. Like, what's the real interest rate once you factor in all the hidden fees? What kind of collection methods are they using? And have you been stuck in that nightmare loop where you're paying and paying, but the main loan amount never seems to go down? But the investigation doesn't just stop with the borrowers. It goes higher up, to the system itself. The source is urging citizens to start asking the government what's going on. What are they doing to regulate these places? Is there any oversight at all to protect people? Okay, so it's one thing to point out a huge problem, right? But what do you do about it? Well, the source also lays out a pretty clear path forward with some potential solutions. And this is all about turning that helplessness into action. The source suggests some really concrete steps. Things like borrowers getting together, forming groups to get more power when they negotiate, reporting these predatory rates to the right authorities, filing official complaints if they're being harassed, and connecting with NGOs that can help with financial education. And this might just be the biggest, most important long-term fix they propose, pushing for a real systemic change. The idea is to advocate for a government-backed microfinance system, one that offers a fair alternative with interest rates that are legally capped to make sure this system actually does what it was supposed to do, help people get out of poverty, not push them deeper into debt. And all of this leaves us with one last really big question. When a system that was designed to be a solution ends up creating a whole new devastating problem, who's responsible? Is it the lenders, the regulators, the system itself? It's a question that goes way beyond this one case, and it makes you think, about the true impact of our best intentions.